In this video, I want to review the portfolio of Rob Vinall. We have the latest updates, the latest buys and sales from Q4 2024. I'm here on Data Roma, and you see that a lot of things have happened here. A lot of things were bought. You see a lot of red, a lot of sales. So we will go through one by one and we will kind of analyze the rationale behind the buying and the selling of each of these stocks. Okay, in case this is your first video from this channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And I almost went to this Rob Vinall annual meeting in Switzerland in January. That's one of my favorite investors, and I like to see his portfolio over time. So I made a video 3 months ago about the Q3 2024. Here is the latest update. Here is the portfolio. Let's see if some stocks were sold. Here, boom, you have a sale of 100% of Salesforce, and it was a small part of his portfolio. So he had a tiny position in Salesforce that was like 0.4% of his portfolio, and he completely sold out of the stock. Okay, very well. And if I look at the history, at the time Salesforce was 20% of the portfolio, and then in 2023 Salesforce was 20% of the portfolio. At the end of 2023 Salesforce was only 14% of the portfolio. He sold, seems like he bought again and sold again. Where is it? Here, no, here. It was a tiny position. Okay, seems like he was a big shareholder in Salesforce a few years ago, and in 2024 he re-entered the position with a tiny position, less than 1%, and now he completely sold out of Salesforce. Okay, so now I wanted to tackle this thing that is not appearing here in this slide. Okay, did he sell other things? No. Okay. The first position, the biggest position, is Carvana. You may be aware of Carvana. It was recently accused of being a complete fraud. The stock was a darling during the COVID era, where the stock went from 100 to 300, 400, and then in 2022 the stock completely collapsed. I mean, in 2022 it reached like $3, I think. So you lose 99% of your investment. And I think that Rob Vinall bought on the way down, and he held. And you know what? The stock is coming back to life. The stock is around $300 now. So it's a complete major win from Rob Vinall. And he told the shareholder base, his investor in his fund, his idea between Carvana. And basically he says that Carvana invested a lot, and this is a double-edged sword when you invest a lot in your online operations. Either the business is doing fine, so it gets propelled by all your investment in online, etc., in the platform, or if you are in the cyclical business and it's going down, you are going way down. So their big investments accelerated either the decline or the growth, and this is the reason why the stock has gone down 99% and now is going up so strongly. And I want to check something. I want to check the percentage, the allocation Rob Vinall had when he first bought Carvana. Carvana was only 8% of his portfolio in 2022. Okay, he seems like he bought Carvana here at the end of 2021. So we can guess that at the end of 2021 it was around here. So he bought at $200, something like this. And I think he bought more Carvana with the coming quarters. He doubled down, and seems like it was a great bet. Great investment, because now it's not a small part of his portfolio, at his biggest position. Let me go through the financials, because he trimmed a little bit his gains. I mean, if he hadn't trimmed Carvana, it would have been like maybe, I don't know, 28% of his portfolio. So maybe you want to reduce the exposure a little bit, enjoy the gains. Okay, what do they do in case you are not familiar with the company? Carvana is an e-commerce platform for buying and selling used cars. That's it. That's the business model. Very simple business model. The company derives revenue from used vehicle sales, wholesale vehicle sales, and other sales revenue. Yep. And let me check the financials. For this company, you have a lot of growth. Look at this. This is the revenue in blue. A lot of growth and not a lot of profitability. If you look at the net income, it's down. You have losses. This is what I told you previously about the big investments that accelerated either the growth or the decline. Well, all the big investments accelerated the losses here. Same thing for the free cash flow. Look at this in blue. The free cash flow is just negative. And you see here, for the latest year, for 2023, the stock is now profitable again. The company is now profitable again. So if I look on the quarterly basis, revenue has declined, it's coming back to life, and the net income is, the company is at break-even now. So maybe the stock was severely punished because nobody believed in the company, and it seems like Carvana is coming out of water. Not completely though, because they still have some debt. Now they start to generate some profits, some free cash flow, but they have a lot of debt. And when the company was very small, maybe they could have gone bankrupt in a few months. So luckily for them, that's good for them. They can continue to operate their business. But I don't think they were far away from going bankrupt. They have what? $7 billion of debt compared to a market cap of $30 billion. Okay. And at the time, the market cap was tiny and the debt was huge. So I think it was very risky. And I think the bankruptcy was not far away. A short report was issued for Carvana. By which one? Is that by Hindenburg Research? Let me check. Hindenburg Carvana. Yes, this one. Please check this link. That's a very interesting, very important paper in case you want to invest in Carvana, because now you may be seduced by the stock going up and you think, oh yeah, that's great, the recovery is great. Please look at the bear case, the down, the pessimistic scenario, because you have some tricky accounting over there and the stock can again collapse another time. Anything can happen in the stock price. You have a lot of momentum. When it comes to the valuation, you have a forward PE ratio of 100. Yeah, no wonder why they wanted to trim the position a little bit. We'll see. That's very interesting. I hope they sell more Carvana. I've been following Rob Vinall and read all his letters. So all his interviews, etc. I'm a fan of Rob Vinall. I wish he trimmed more and he cut the position. I think that's very risky to have Carvana as your first position now that the stock has increased so much. But that's good. That's good for the gains. The stock is going up. That's some smart capital allocation here. Portfolio management. Okay, let me continue with the second one. You have Meta Platforms. Meta Platforms has been one of Rob Vinall's core investments for years now. And when the stock was crashing, when Meta Platforms was crashing in 2022, he held. He didn't sell the position, saying the business was too good to ignore, too cheap to ignore, the management was great. And you know what? Great businesses rebound. And if you look at the financials of Meta Platforms, you see a strong rebound in net income. Same thing for the free cash flow here. You see that the company has a lot of cash. The efficiency is here. They are doing now buybacks. They are giving a small dividends. So things are very rosy at the moment for Meta Platforms. This is one of the best turnaround play I've seen. So congrats to Rob Vinall that invested in Alibaba, in Meta Platforms, and held his position here. That's the two biggest holdings, 20% of his portfolio. Now Wix.com. Wix.com is a different category. Let's say it this way. Wix.com is a company that creates websites. It's very cool to use. I have used it in the past. It's a company from Israel, a tech company, software as a service content management system platform that allows users to create, customize, and manage websites for themselves or their clients. Yeah, very cool to use their products. and you see that the stock has gone up again. Same thing, you have all the SaaS companies have improved efficiency at the moment, and the stock is going up accordingly. This is a company with a lot of growth. Look at this is the revenue growth, a lot of growth. For the net income, I'm not sure, but what I'm sure of is seems like they have stopped the bleeding. Similarly to Carvana, you are at break-even now. You don't produce spectacular earnings, but you just cut the losses. It's about efficiency, right? So you don't burn the cash, you start to generate the cash. You have a large SBC, a large stock-based compensation, so stock options, but still the company is improving. Very good news. And the stock price is showing this. People are getting more optimistic. About the valuation, you have a forward PE ratio of 30. So maybe the stock is not that expensive at the moment. And what has been the history of the stock price? You have a lot of volatility. I mean, we are not... Yeah, okay, so that's quite recent, 10 years ago. You have a lot of volatility. Maybe the stock is interesting at the moment. Rob Vinall wants to trim the stock a little bit. That's, again, smart portfolio management. You want to secure your gains. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. Now, the fourth stock of Rob Vinall's portfolio is Credit Acceptance. In case you don't know this Uber cannibal, they are famous for buying back their own shares. It's a consumer finance company that specializes in automobile loans. And this is quite tricky what they do with the loan. In case you don't pay your loan, I will let you watch other videos for this. You're not here for that reason. But I don't really like this business. That's an industry that is quite suffering at the moment. You have, loans for this kind of class in the US. You have a lot of delinquency. The post-COVID era is not that rosy, and you see this in the stock price. You see this in the financials. Let me check the revenue. You have growth that has stopped after COVID. The net income has declined substantially. The debt has improved. The free cash flow of the company has declined or stopped growing. I don't know why you can't see this. But the company is known for repurchasing their own shares. So when the stock is cheap, they do buybacks. And in 2021, they did 17% buybacks. Like they bought back almost 20% of their shares in 1 year. Similarly to 2022, 2023, like a small buyback. And now 2024, they bought back 4% of their shares. So the company is here, still operating. The growth has stopped a little bit, but the business is definitely not dead. They continue to do buybacks. And the forward PE ratio for the business is 12. So maybe it's getting cheap at the moment. This is not my kind of company I want to invest in personally. But maybe it's getting interesting here at this level. What is the latest move from Rob Vinall? You have almost no change in the position. So still, that's a high conviction investment from Robert Vinall. That's still 13% of his portfolio. I mean, that's good. That's decent. For Carvana, I think he just trimmed the position. He doesn't want the position to be 30% of his portfolio. He would prefer to have Meta Platforms as his first position. And for Wix, I think that's the same thing. You just take chips off the table. For Credit Acceptance, no change. Now, Interactive Broker. That's a recent buy from Rob Vinall. If you check the activity, IBKR. When did the first buy Interactive Broker? Where am I? Well. IBKR. Here we go. Add. Let me check really quick. He bought Interactive Broker at the beginning of 2023. Quite a recent buy. I mean, he has not held for not even 5 years. He had bought more in 2023. He had bought more in late 2023. And he had bought more in late 2024. And now he reduced the position. Okay, let me show you what I have on Guru Focus. The stock is going parabolic. The financials are great. You know Interactive Broker. I suspect that many of you watching this video use their service. It's a brokerage app, maybe the best one in the world. And the stock is going up and up and up and up and up. That's just maybe scary. You may call that whatever you want, but basically he bought the stock at the beginning of 2023, like around here at $80, and now the stock is $200. So $200. This is a spectacular business. A lot of, high gross margins, high net margins. This is a very efficient business model. And as the world is getting more digital, you have more volume, more transactions. They are making more money. Maybe the free cash flow is not the best metric to look for this company, but when it comes to the growth, this is just exponential growth for this business. What about the most recent data, the quarterly data? Yeah, growth has slowed down a little bit, but that's still fine. And what is the valuation? PE ratio of 30. Yep, that's if growth is slowing down, maybe it's a smart decision to take some chips off the table. I think that's just some portfolio management thing here. He is reducing the IBKR position by 30% just because the stock price is going up a lot, and he wants to reallocate the cash to another position. That's my opinion here. But okay, it's nothing significant here. He has not sold even half of the position. Now I suspect he used some of the proceeds of the sales to buy Pinduoduo. More Pinduoduo. Pinduoduo is a new investment from Rob Vinall. Let me check here. He bought Pinduoduo here in 2023, I think. Here. In late 2023. You have the letters online. You can see what Rob Vinall is saying about Pinduoduo. This is not the goal of this video, but just so you know, you have all the letters online. And he had bought more Pinduoduo along the way, I think. He had added more in 2024. He added more at the middle of 2024. And now he added even more. Okay, so similarly with other big investors, China is coming back to life, maybe. Similarly, Pinduoduo was accused of fraud with Temu accounting manipulation. Here you see this big dip in the stock price in summer 2024. The stock has rebounded, and then the stock delivered some mezzo earnings. I don't know how to call this, and the stock is going back to these lows. Pinduoduo is a great company in China. I don't know. Oh, that's the ADR. Okay, that's why it's written Island. Pinduoduo, in case you don't know, it's a multinational commerce group that owns and operates a portfolio of businesses. That's e-commerce, digital economy in China, growing very, very fast. Faster than Alibaba, faster than JD.com. If you go to the financials, to the charts of this business, you see the revenue that is going up, double-digit growth. Net income, similarly, you are making a lot of money, you generate a lot of free cash flow, you have a lot of cash. That's good. And you have a lot of big expectations. And for the latest quarter, net income is slowing down, is decreasing a little bit. For the revenue, you still have some strong growth. Free cash flow is becoming stable. Yeah, maybe the business is becoming mature now, but still, come on, we are talking about a business that is profitable at a PE ratio of 9. So I like PDD a lot. And the stock has done nothing for the past year and a half, 2 years. So yeah, that's a good investment. I like the PDD investment from Rob Vinall. He had added more. Yeah, that's only 7% of his portfolio. That will not move the needle. What will move the needle for Rob Vinall is the big four. The big four over there. Okay, now let's talk about another Chinese investment, Yum China Holding, that he first bought last quarter, if my memory is correct. Let's take Yum China Holding. He bought here in Q3 2024, Yum China Holdings, and I covered it in my video like 3 months ago to cover this quarter. And what do you have here for the financials? Yum China Holdings. This is a conglomerate about quick service restaurants. System-wide sales. It's the largest restaurant operator in China. It generates revenue through its own restaurant franchise fees. You have KFC, Pizza Hut. Oh, so that's basically Yum brands for China. And Rob Vinall is investing into this company as I would say an arbitrage play, as a Chinese recovery, consumption recovery. Interesting, definitely not my style, but you are talking about the revenue going up, net income going up over time. You don't have a lot of growth, but still you are talking about a lot of stability in free cash flow, making money, doing buybacks, some smart buybacks when the stock is going down, some 1% dividend yield. That can be a completely great investment in the next 5 years. So we will see, wait and see. He reduced a little bit, 5%, but that's almost nothing. He still has 95% of his investment. Now, this has not moved. H World Group, that's again a company in China, I suppose. HTHT. Let me check really quick. HTHT. That's a company in China, and what do? This is a multi-brand hotel group. He is betting on Chinese consumption, restaurants, hotels, online commerce with Pinduoduo. But okay, for this one, he has not touched the position. One of the key highlight of his portfolio is the new buy here, Microsoft. You all know Microsoft. You all know it's a great company. You all know how sticky their products, services are. You all know that they are investing in OpenAI right now. They plan to invest a lot in AI efficiency to improve the suite like Excel, Word, PowerPoint. You want to use AI in this software, okay? And they plan to invest massively in data centers, like $80 billion. I think Microsoft is very appealing right now. This is also my opinion. The price, the PE ratio is 30, but you are talking about a clear leader in its category. It's almost certain that the earnings will improve in the next 5 years. The free cash flow will improve. The efficiency will be here. And they will be one of the key leaders of this AI race. So I'm happy to see this for Rob Vinall. He started a small position. Seems like he does this alone. You start first position and then you increase over the coming quarters. So you will see. You will have an update video in 3 months for 2025. But maybe he will add more to this position over time. Microsoft is one of the best companies in the world. One of the best companies in the world. You have another investor, Terry Smith from Smith, that is investing heavily in Microsoft. It's a key winner. Winners keep on winning. And now the PE ratio for the S&P 500 is 30. Okay, you can buy one of the best companies in the world for the same valuation as the S&P 500. Maybe if you look at it this way, that is very interesting. And let me check here who are the biggest holders of Microsoft on Dataroma. You have Bill Gates Foundation, obviously, Altarock, Triple Fund. Terry Smith is here. That's 11% of his portfolio. Chris Hahn. Oh, that's very interesting. Yeah, that's good. And now we're talking about little positions, less than 1%. You have Paycom that didn't move, and John Deere didn't move. Small positions. So it's a very interesting change. Basically, not a lot of moves. He sold out of Salesforce. He added Microsoft instead. He's buying a little bit more China here with Pinduoduo, still betting on the Chinese recovery and trimming some of his gains for tech companies. So a very interesting quarter from Robert Vinall. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.